Good morning. As a self-managed superannuation fund trustee, you want quality advice. Now, the Self-Managed Super Fund Professionals of Australia recently reported that whilst 10% of trustees are competent to manage the investment and compliance affairs of their fund, 90% of them realise they need advice and subsequently outsource this to a financial planner. This is because they either lack the necessary expertise or, more practically, they really just don't have the time and don't want the hassle. Because of this, cash levels in SMSF still sit at above 30% on average, regardless of the risk profile of the fund members. Now, typically trustees will seek advice about investment strategy, asset allocation and tax, but this advice must add value to the trustee's knowledge of the portfolio. Consider this for a minute. The ASX is currently valued at about $1.5 trillion. And yet it accounts for just 2% of world stock markets. Now, it's absolutely clear that there's room for trustees to seek valuable advice as growth of funds under management in the superannuation industry outpaces that of our share market. ATO figures show that as of December 2013, total SMSF exposure to offshore equities is a minuscule 0.039% of assets. Now, the reasons for this low figure are probably a combination of trustees' preference for investing in what they know, and they certainly know the ASX. Equally, it seems trustees do like to invest in what is convenient and simple, and the thought of buying offshore equities for many is just too hard. However, there are options through which self-managed super fund trustees can easily access offshore shares via the ASX, allowing them to expose their portfolio to industries and brands that simply just don't exist in Australia. Tracy Ferguson, thanks for listening.